You know when you pick up a product and just wonder, how on earth did they actually make this? It's a fascinating question, but for a business, there's an even more important one. How much did it cost to make this? Because honestly, understanding the financial story of how a product comes to be is every bit as important as the physical one. Today, we're going to break that whole process down.
All right, let's dive right in. The very first thing you've got to get your head around is this. Accounting for a company that makes things is a completely different animal than accounting for one that just buys and sells them.
And this slide just lays it out perfectly. A retailer, their life is pretty simple. They buy a thing, they sell a thing. Done. But a manufacturer, they have this big, messy, complicated step right in the middle. They're buying raw stuff like wood or leather, and then they have to track the entire transformation of that stuff into a finished product. And yeah, that's where things get tricky. So if making something is so complex, how do accountants even begin to track it all? Well, they use what you can think of as a recipe, a cost recipe. And it's made up of 3 key ingredients that go into every single thing that gets made. Okay, our first ingredient is direct materials. This one is probably the most obvious. It's the stuff you can literally see and touch in the final product. It's the core physical components that it's made from. And these examples really nail it. Making shoes, it's the leather. Building a table, it's the wood. Baking bread, it's the flour. We're talking about the main event here, the fundamental building blocks of whatever you're creating. All right, ingredient number 2 in our cost recipe, direct labor. This is the cost of the people who are physically hands-on turning those raw materials into something new. Their work is directly tied to creating that final product.
So we're talking about the wages you pay to the folks on the assembly line, the bakers who are actually kneading the dough, the shoemakers stitching everything together. If their job is to physically make the product, they are direct labor. Simple as that. And now for our third and maybe the trickiest ingredient of all, manufacturing overheads. The best way to think about this is as the everything else bucket. It's every single other cost you need to run the factory that isn't a direct material or direct labor. And just look at this list. It shows you how wide-ranging this category is. We're talking about the rent for the factory, the electricity that powers the machines, the salary for the supervisor who oversees everyone, even little things like glue or lubricants for the equipment. All of it is absolutely essential for production, but you can't really point to any one of them in the final product, can you? Okay, so we've got our 3 ingredients: materials, labor, and overheads. But where does an accountant actually put them? Let's follow the money as it moves down its own little financial assembly line.
What's really cool is that the financial journey almost perfectly mirrors the physical one. Costs start out in a raw materials account. Then they get moved into a work in process account while the product is actually being built. And finally, they land in a finished goods account when it's all done and ready to sell. Now, let's zoom in on the most crucial part of this whole journey, the work in process account. This is the absolute heart of manufacturing accounting. Think of it like a giant financial mixing bowl. As you use materials, pay your workers, and run the factory, all of those costs get poured right into this one central place. And then, once a product is totally complete, its entire accumulated cost, everything that was in that mixing bowl, gets transferred out and put into this account right here, finished goods. This is basically the financial version of a warehouse shelf, just holding the value of everything that's ready to go to a customer. Okay, theory is great, but let's make this real. Let's look at how the numbers actually flow in a real-world example. It's time for the final tally. All right, check this out. This is a real work-in-process account for a company. Just focus on the left side, where the costs are flowing in. See that? There are 3 ingredients, plain as day. Over $380,000 for direct materials, over $150,000 for direct labor, and a big chunk for manufacturing overheads. All of it is being dumped right into that financial mixing bowl. So when you add all of those costs together, what do you get? You get this number, our $953,235. That is the magic number. That is the total cost of every single thing this company finished making during this time period. It's the one number that captures the value of all their hard work. And that massive number, the total cost of goods manufactured, gets picked up and moved from work in process right over to the finished goods account. Its journey through the factory is officially complete. But why? Why go through all this trouble, all that detailed tracking? I mean, why does this matter so much? Well, the takeaway here is what separates a company that thrives from one that's just guessing. It all comes down to this really simple idea. You absolutely cannot know your profit if you don't actually know your cost. That number we just calculated, that becomes your cost of goods sold as soon as a customer buys the product. And without knowing that number, setting a price or figuring out if you're profitable is just a shot in the dark. And this is the real power of it. When you have that one true cost number, everything changes. You can set selling prices that actually guarantee you make money. You can spot when your material costs are getting out of control. You can measure how efficient your factory is and make smart business decisions based on facts, not just feelings.
You know, the source material had this fantastic line that just perfectly sums it all up. The most important process to remember is that the cost of production will always be calculated first. It's the foundation. It's the number that every other decision about sales and profit is built on. Which really leaves us with one final thought to chew on. This whole process, it's all about finding that true cost. That is the vital first step. But the real question for any business, the one that makes all the difference, is what's the second step? What do you do with that knowledge to actually win?